Now, when you talk about silver, and some of that same Reddit crowd has come over to buying silver with the hope that the short sales will be covered in silver. Now, that's incredibly intelligent because silver is dramatically low priced with the gold silver ratio of about 75 when it comes out of the ground at about 7 times. Therefore, silver is a undervalued asset that's also been squeezed. And yes, some of these short sellers are going to get squeezed and it's going to escalate the price going forward. But this is a far better bet to play than being long companies like GameStop or AMC.
Welcome back to Wall Street Silver. We have a fabulous guest with us today, Mr. David Tice from Moran Tice Capital Management and formerly of the Prudent Bear Fund. Thank you for joining us today, David.
Glad to be with you guys.
Yeah, back again. You were one of our earliest guests back in March when we were first getting started. So we really appreciate it. Lee, do you want to kick things off?
Sure. So we want to get your opinion on the short squeeze movement, which has started out in Wall Street bets, focusing in on heavily shorted stocks. What's your view on that as opposed to, say, a squeeze on silver?
Well, I've been a longtime short seller. The Prudent Bear Fund was mostly short stocks, and so very familiar with short squeezes. We participated in bigger companies to avoid being short squeezed. However, it was still part of the risk of being short stocks. These days, the Reddit crowd, the Wall Street Bets crowd has gone after GameStop and AMC, and frankly, buying some pretty bad companies, frankly, at very, very high valuations, with just the hope that the shorts are going to cover, and that additional impact of buying will cause the stocks to levitate. And I understand that game. I used to play against that game, but what they're doing in those kind of companies is GameStop and AMC are both dramatically overvalued, and those people that are short those stocks know what they're doing. Now, when you talk about silver, and some of that same Reddit crowd has come over to buying silver with the hope that the short sales will be covered in silver. Now, that's incredibly intelligent because silver is dramatically low priced with the gold silver ratio of about 75 when it comes out of the ground at about 7 times. Therefore, silver is a undervalued asset that's also been squeezed. And yes, some of these short sellers are going to get squeezed and it's going to escalate the price going forward. But this is a far better bet to play than being long companies like GameStop or AMC.
Yeah, we talk about that a lot on Wall Street Silver on our own Reddit community, that what the Reddit crowd on Wall Street Bets is doing is just it's a more of a gambling strategy, and they use options even in their strategy, going after some sort of gamma squeezes, things like that. Whereas on the silver side, our most of our thesis, a lot of us play in the mining stocks also, but the main focus is if we just take the physical off the market, we're dramatically driving up the leverage for the paper game, the paper rehypothecation of silver. I don't know, is that anything you ever played with in any of your current funds or your past funds?
Well, we have a fund and we manage individually managed accounts, and we're heavily invested in silver stocks. And in fact, we feel like silver is so undervalued relative to gold that we actually own physical silver in PSLV because we think it's such a great play. And in terms of your paper versus physical argument, we agree 900%. That is the big issue. We believe that there's been suppression in the silver market, especially where some of the big banks have consciously taken big short positions in order to keep the price of silver down. And once the manipulation ends, and it always will end, then that's another component to the reason that silver will rise in price.
Did you follow what happened with palladium a couple of years ago, where the leverage just became so extreme and the shortages in the physical palladium market that it's like they gave up, and that's when boom, palladium took off and skyrocketed.
And in fact, I was just listening to Ted Butler, and he was talking about that very issue. And I don't have all the details of that, but you articulated that well. What's happened is there ended up being an excessive short position in palladium, and then eventually the people couldn't take it anymore, and there started to be covering of the palladium. And I think palladium is up like fourfold or something like that.
You know, speaking of leverage, we have valuations right now in the equity markets that are just, they're beyond nosebleed. I mean, this is far more worse than I think the tech bubble was. When are the investment professionals going to shift out of these crazy stocks and start buying some value in gold and silver miners and, you know, physical as well? I mean, do you see that happening anytime in the near future?
Well, I've made a living being short stocks and buying gold stocks. And I tell you, I'm often early, and you could argue I've been wrong for a lot of time because I have been so early. And I'm a believer in the Austrian school of economics, and most of the really smart bears believe in the Austrian school. And I say that we bears tend to underestimate the degree to which policymakers will do something short-term oriented in order to kick the can down the road. Now, I do believe that we're getting closer. We know how this is going to end. It's going to end badly. I'm not really short stocks right now, but I'm a believer in gold and silver mining companies. And frankly, my partner and I were both investors in both gold and silver mining companies and short stocks. And both of us have kind of sworn off short selling because it's so dangerous to be short stocks in this fiat money environment. But I think owning some long dated puts makes some sense. But in terms of when this ends, it's kind of waiting for Godot. We've seen this massive, we have actually printed 40% of the M1 that's been created since the beginning of the United States of America, just in the last year. You know, it's
insane, isn't it?
Amount of parabolic and exponential growth in money, and therefore anything is possible. And in the past, we talked about a melt up. I think we've had the melt up. I do feel like we're more at risk now for a significant decline. I think rates are going to potentially have to go up. We have an inflation scare now. We have a slowdown in the economy with consumer sentiment declining, and we still have a COVID risk out there. So there's a lot of reason to be concerned with these stock market levels levitated where they are.
I was going to say, you make an interesting point. You've kind of sworn off short selling. We had Bill Fleckenstein on just about a week ago, and he pretty much swore off short selling as well in this environment. We've had all these short squeezes this year on GameStop, and I'm just wondering, is there anyone out there shorting, and the lack of short sellers out there? I mean, is that just going to make for a much more dramatic fall because there's not going to be people out there just covering their shorts and bolstering the market?
Well, that's a good point, Lee. And I haven't really, I mean, there's Jim Chanos is still shorting stocks, but he's not net short. I mean, he's typically long against his short. And shorts do provide a valuable moderating influence when markets crash and that the shorts end up covering. And therefore, they do keep markets more honest. And I would think there's fewer dollars from professionally managed short sellers than there's been in a long time, I would guess.
Yeah, I would agree with that. I want to go back to what you were saying before, where you think, with this slowdown coming, the eviction moratorium has just ended. Unemployment benefits have ended for, I don't know, 12 million people this week. These are two big whammies that are hitting the economy in September. And in the face of this, I just got to think, and I've seen all sorts of consumer confidence numbers dropping dramatically in recent, these recent surveys that, University of Michigan and various entities do. In the face of all this, I just find it really hard to believe that the Fed could even contemplate tapering or raising rates, even with inflation going 5. If we start seeing prints from CPI at 6, 7, 8%, with the slowdown and everything, could you still imagine a scenario where they actually taper?
Well, I don't think rates are going to go up for very long or very much. And I'm not, don't have a strong opinion on exactly which way the Fed leans short term, because frankly, we know the market will throw a temper tantrum if rates go up very much. And then if they do, the Fed will buckle. And they've done that countless times in the past. And so inflation is a bit of a scare now, although I do feel like that could start to moderate, because I think it's possible the inflation number is going to be transitory. I'm not sure about that. There's a lot of difference of opinion. My partner and I even disagree on that a little bit. But regardless, even if inflation doesn't get to 7 or 8%, if it gets to 3.5 or 4 with rates where they are, that's a bad sign. And rates are as low as they've ever been in history. So
it's just so the gold play and the silver play is just negative real rates right now. Is just the story going forward, no matter what.
Exactly. And in terms of people talk about the strong dollar versus the dollar index, et cetera. Well, the dollar could still be the least dirty shirt in the hamper and could escalate against the euro and the yen and the renminbi. But relative to gold is such a much better asset. And we've seen history of dollar devaluing since the Fed was formed, that where it's lost more than 95% of its value. How can you not own some gold in this period of monetary excess and lack of any kind of discipline?
So let's talk about silver more specifically then. People talk about gold as an inflation hedge, but silver is not necessarily considered as much of it's a more volatile. Gold will go first, but percentage-wise, silver historically in these types of environments goes up way more than gold, doesn't it? Back in the 70s, or historical examples.
All you need to know about silver is it's just amplified gold, and you get more gold
when it launches. When it launches, it really launches.
Exactly. And you look at the gold to silver ratio, where the average over the last 150 years has been in the 40s, and right now it's at 75. So if you think gold's going to go up, silver is going to go up more. And then you also have the fact that you will benefit from this individual factor of silver being especially undervalued relative to gold today.
Yeah. Do you follow at all there's the whole monetary aspect of silver, but then there's the industrial side. Is that any part of your considerations in terms of silver versus gold?
Certainly, because silver is in more and more demand from an industrial standpoint. It helps in the green energy movement, and it is utilized more for electric cars. There's all kind of additional uses being called on for silver, and therefore it's a great play from that perspective as well.
Yeah. Are there any specific silver mining stocks that jump out as you as I don't, if you don't want to talk about your book, I fully understand, but are there any that you really are comfortable mentioning publicly that you like
Well,
more than others?
I'll mention a couple of the bigger ones. We really do like Pan American Silver, and we also like First Majestic. And all these companies are selling at such dramatically cheap prices, even based on current earnings. And when the price of silver goes up, and what your audience needs to understand is if you're just playing silver bullion, these mining companies have so much operating leverage. And when the silver price goes up, then their margins are going to go up even more. And then there will be additional buyers in the sector buying silver mining companies. And Rick Rule has talked about the fact that the ownership of mining companies is just so dramatically low compared to the 3-decade average. It's about 1/5 of the 3-decade average. And therefore, as individuals and institutions start buying these companies, and frankly, these companies are selling at such low multiples. Our portfolio is selling at 11 times 2021 earnings, and it has organic growth rate of about 20% just from, physical ounces being produced. That's dramatically cheap. And so institutions and portfolio managers are going to eventually start putting these stocks in their portfolios.
Do you think that's going to initiate a heavy duty short squeeze when that happens, when institutional investors wake up to the value of these stocks and precious metals in general?
Well, I don't really think there's that many people short the mining companies right now.
Oh, no, I understand.
But in terms of the big play there is physical silver. And as you guys have talked about a lot, this phenomena of paper silver being utilized to massage the price of silver. And when more and more people are taking delivery of silver, and when the price of silver gets going again, we had something going back in February when silver went to $30. And then there was a massive move by the powers that be to squeeze both to knock down the price of gold and silver. And silver got knocked down from 30 to 26. But what happened is essentially that was done in order to keep the price of silver and gold from escalating and creating a big storm of increased demand. And it worked. And now we have the price of silver at 24. But we're going to hit $30 again.
It was ridiculous that weekend at the end of January, first few days of February, they dumped 1.5 billion ounces of paper silver on the market in just a space of like 2 or 3 days. And I think that's something like almost 2 years or a year and a half of global mine production just in paper silver. They just invented it and dumped it on the market.
That's exactly right. It was actually 2 years of global mine supply, and it was done with indiscriminate buying. And so normally a trader wouldn't go in and sell like this without caring about the price, but their objective was to knock the price down.
Are you still working on that documentary with the cyber?
Yes, I am. And in fact, I'm very excited about it. This is about the vulnerability of the power grid. This is a passion project for me. People can go to griddown.com, and we expect to launch this in 3 months or so. We have a pretty innovative marketing program plan that utilizes a pay it forward approach in terms of, buying it. And 25% of the proceeds of people watching the film are going to go to 501c3 organizations fighting to make sure that we get the grid fixed. And this is a very fixable problem.
Gotcha. So are you familiar with Klaus Schwab and him talking about the cyber pandemic and cyber polygon and all that?
Yes, generally.
So, I mean, do you think they're forecasting something that will probably happen?
Well, we know in our big four enemies' military playbooks that they believe in asymmetric warfare and bringing down, civilian infrastructure. And we just have such a lucrative target with our power grid because
Yeah.
we have not hardened it and protected. So I think that, frankly, it's one of the scariest existential threats out there that we face.
I would imagine that all the cryptocurrencies in that kind of scenario are just going to be nothing, and precious metals will be the place to have some wealth stored. Would you agree with that thought?
I definitely would.
Have you touched in any cryptos or even the big ones, or is that just a no-go area for you?
We participated in Bitcoin when it was at 10,000 when we launched our investment management company. And I felt like as a fiat money defense at 10,000, it was a very reasonable risk reward play. However, when it got to 60,000, we felt like that it had gone too far too fast. There was already discussions from Bank of England as well as Bank of International Settlements talking about the danger of cryptocurrencies. And it seemed to me as if the bloom was off the rose. And so we exited our position.
It seems like Russia and China are just buying loads and loads, and many other central banks right now are all adding to their stockpiles of gold dramatically in recent years and even in recent months. I've heard the Central Bank of Brazil, India, China, Russia, they're all adding dramatic amounts, and even the smaller central banks are also. Whereas the Western central banks, you're not hearing of any significant additions. Do you have any strong thoughts on the game being played here among the different central banks? Are they preparing for some sort of reset with their gold?
And we even had Macron say tell central banks to sell their gold.
Yeah,
so
yeah, France,
anti-gold the
Macron.
Western countries are. Yeah.
Yeah.
Well, I believe that, the BRIC countries for a long time have been ticked off at the role of the dollar as the global reserve currency and the degree to which we have kind of abused that role, and where we've had no financial discipline, but we've been able to do what we've wanted because our dollar is the world's reserve currency. And the Russian, China especially, have been moving against it. And the Chinese have been encouraging their citizens to buy gold. They have billboards telling people to buy gold. That's been going on for probably a decade. Russia has added to their gold dramatically. And there's an old expression that he who has the gold makes the rules. And therefore, some of our adversaries are definitely moving more towards gold and away from the dollar.
Yeah, it seems like they're all preparing for some big play coming, and who knows whether it's near term or the big game is 5 years in the future. I'm not going to hazard a guess, but I'll ask you to hazard a guess. Is there something like that going on where they're preparing for a full reset of currencies?
Well, there has been talk about that in backroom meetings, in G7 meetings, G20 meetings. From what I understand, people a lot more plugged in than me, have opinions about that. I think that we have a dysfunctional global currency system, and you look at what we've done in monetary policy. The quote I gave earlier about 40% of all the money created since the beginning of the republic, coming in 1 year. I mean, we've never seen anything like this. In the past, we've increased M1. It's doubled every decade or so, and now it's just gone parabolic. And therefore, this is an out of control system. Now, inertia is always very, very powerful. And a lot of people just keep it going because a reset would be disruptive potentially, but I have a feeling it's coming faster than 5 years.
You know, our own Fed, the PhDs in our own central bank, they're not stupid people, right? These guys see what we see. You know, even Greenspan said that with a wink and a nod. A few years ago, he said, "Yeah, we see what you see. We know what's going to happen." Why do they keep doing what they're doing when we all know where eventually this leads to?
Great question, because my board of directors for my mutual fund literally 12 years ago, after dinner and at cocktails, we, kicked that subject around. And I think that a lot of it is not on my watch. And they feel like they realize financial discipline and monetary discipline needs to be the rule of the day. But the problem is the impact from any financial discipline is so huge that they don't want to take that course. So a metaphor I used to use is that if you had a 12-year-old that was going down a ski slope and he was going 100 miles an hour and he was just, and you saw him and you kind of wanted him to stop because he was just going at breakneck speed and he was going to crash and it was going to be terrible. And you kind of thought about telling him to sit down, but then you knew he would break every bone in his body. And therefore you just couldn't really tell him to, sit down and stop because he was going to break every bone. And it's almost like you're waiting for a helicopter to come out of the blue
And rescue us, yeah.
Rescue him.
Yeah.
But you couldn't wish, that fall on him. So
I'm assuming that Powell doesn't want a Powellville.
Yeah,
right?
exactly.
Like Hoover
right.
had Hoovervilles named after him. I mean, that's basically what it is. They just don't want to be the bad guy.
Yeah.
And you think about it, other than Paul Volcker, every central bank, they feel like they've got enough confidence that they say, well, it's not going to be me. And you can argue Greenspan, but we've had Yellen since, and Yellen got away with it. And so, and therefore, they feel as if, well, we'll get out of it somehow. But I'm not sure how with this massive amount of debt. And we've been able to benefit from the dollar's reign as world's reserve currency. And therefore, that's one reason the powers that be don't want to see gold and silver go up in price a lot.
Yeah, gotcha. Well, thank you very much. We really appreciate you having shared your views on this with us, Mr. Tice, once again. And we hope to talk to you again in the next few months as things develop this year.
Look forward to that. You guys are doing a great service at Wall Street Silver. So keep up the great work.
We appreciate
Thank you,
it.
Dave. Much appreciated.